Thinking about buying out your car lease? Let's break down exactly how a lease buyout works when it's actually a smart move and how to figure out your payment. A lease buyout is simple. Instead of handing your lease car back at the end of the lease, you buy it. You pay the leasing company a set price, called the buyout, and the car becomes yours to keep. There are a few great reasons to do it. Maybe you're over your mileage limit and want to dodge the overage fees. Maybe there's wear and tear you'd get charged for. Or maybe you just love the car and it's worth more than the price to buy it. So where does that price come from? It's mostly the residual value, the amount your leasing company predicted the car would be worth, set back when you first signed. Add any taxes and a purchase fee, and that's your payoff. Let's run a real one. Say your leasing company's payoff is $22,500. Drop that into the Champion Lease buyout calculator and roll in about $950 in taxes and fees. Put $3,000 down, estimate 6.9% over 72 months, and you're looking at about $348 a month, financing roughly $20,450 all in. Now, how do you pay for it? You've got options. You can pay cash or finance the buyout with a lease buyout loan and spread it out over time, and you're not stuck with the dealer's financing. Shopping lenders can get you a better rate. Here's the smart part. If your car's market value is higher than the buyout price, the difference is equity, real value you'd walk away from if you just returned it. In today's market, that happens more often than you'd think. Champion Auto Finance helps you buy out and finance your lease across qualified lenders in New Jersey, New York, and Pennsylvania. Run your numbers today at championautofinance.com or call us at 732-618-2036.